What's happening, everybody? It's your boy, Sean McLaughlin, at Options Sean on Twitter X. Today is May 16. Hold on, there we go. See that? I don't know why I'm getting that sound there, Gene. I'm getting feedback on my own voice here. You know what I'm going to do? I'm going to turn my volume down. Now I won't hear it. So now it's good. All right. Sorry about that, everybody. A little technical snafu. I'm trying to be able to check the chat to see the questions when they come in. Anyway, this is Sean McLaughlin. This is the options jam session, the all-star options jam session for Thursday, May 16, 2024. Hope you're doing well. This is a little session here for those of you who don't know, maybe you're a first timer here. We review any action amongst trades that we have on the books. We don't look at every trade that we have on, but we look at any exits that we may have had, whether it's for a win or for a loss, any adjustments we may have made in any existing positions. Then we'll go through and update some stops on positions that need updating. And finally, we'll review any new trades we've put on since we spoke last week. But before we get into all that, of course, I have to drop the old disclaimer here that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way from seeing how I put on trades and think about managing risk. So now that we've got all of that out of the way, let's bring up the old big picture here. Let's look at the S&P 500. You can see that, boy, it's been, I don't know, 1, 2, 3, maybe close to 10 days of just solid upward movement. Back here on May 1st, people were a little jittery. People were thinking this was the next leg lower happening right here. Armageddon, everyone was up in arms. Well, cooler heads have prevailed, and we've had nothing but up days, more or less, since then, and we're breaking out to new all-time highs. It's the same story in the NASDAQ as well. It's a bull market, everybody, and we need to be positioning that way. Just to further drill it home, let's bring up the VIX chart here real quick, and you can see VIX is basically at the lowest levels since November, and you have to believe the way the markets are moving right now, we're probably going to plumb these lower levels here. We should see an 11 handle on VIX very soon. It would not surprise me at all. What does that mean for us? That just means that there's not a lot of fear in the marketplace right now. There's not a lot of options premiums to be selling if you like to do delta neutral premium collection type strategies. You're not getting paid as well. It's tough. But the good news is if you are bullish and you like to position for long-term breakouts or long-term upward moves, the options market's going to make it pretty attractive for you to keep it simple and just buy calls. So that's the big picture here. We don't have a whole lot to talk about this week, which I guess is good news. We'll dig into some of the positions here that we've had action on. Well, let's start with the bad news. Let's just rip the Band-Aid off. GDXJ. This was a trade that we put on back in early May, early May, May 1st, perhaps. We sold a strangle, a June 38.45 strangle that we collected $1.65 for. So what is a strangle, if you're hearing this word for the first time? Basically, what that means is we shorted naked puts at the 38 strike, and we sold naked calls at the 45 strike. All in, we collected $1.65 for that trade. And the bet we were making, the thesis we were making, is that GDXJ would both stay within this range here, above 38 and below 44. And we'd also see volatility come in. Volatility was attractively priced. It was relatively high at this time when we put the trade on. And we thought volatility would come in. Well, we got it half right. Volatility did come in. All right. The volatility has gone down in the GDX option since we put the trade on. But GDXJ also rallied and got up above our risk management level. 44 was the level we were looking for. We wanted to see a closing price above 44. We got that yesterday. This morning at the open, GDXJ kind of flirted with the 44 level. In fact, it was trading below 44 for a little while. But once it got back above the opening range high, that's when I pulled the trigger, got out. The good news here on this bad news trade is that We collected $1.65 the day we got in. Well, today when we got out, or at least when I got out, I paid $1.87 to get out. So I lost 22 cents. Hey, that's not bad on a naked short strangle trade. I'll take those kind of losses all day long. No sweat. We're out of GDXJ for a small loss, but hey, that's the only piece of bad news I got for you here. Speaking of delta neutral trades, here's Deere and Company. We got out of this one this morning. Thanks to a negative earnings report reaction. Deere announced earnings this morning, and you can see here the market didn't like it. It wasn't terrible. This isn't a terrible reaction for Deere, but good news for us is that today's trading action sent it right back into the middle of our range. Right, we're short an iron condor. Most importantly, we were short the 350 calls and the 350 puts and the 430 calls. Well, today's trading brought it right back down into close to the middle of our range, which is exactly where we want it to be. We had a resting order to close this spread down at half of what we initially collected. We initially collected 315. You can see right here. This morning, I got hit sometime shortly after the open at $1.50. In fact, I got price improved. I think my resting order was at $1.55. Market makers, every once in a while, they're feeling a little giving, and sometimes they give you a little price improvement. And I think I got that today. I got out at $1.50, but any exit under $1.60 is a good trade here on that iron condor. So we are out of Deere, hit our profit target. The profits in Deere more than paid for the losses in GDXJ, so we'll take it. And now the last piece of action this week, and this is some really good action. This is our position in APH Amphenol Corp. Back in middle February, late February, we got into some July 120 calls right here. You can see this purple dot. This position, kind of mucked around for a little bit. It was looking great. Then it pulled back almost back to our entry price, but it ripped off this 50-day moving average. It's done nothing but go straight up ever since. And according to the plan that we laid out on the day we put this trade on, if and when Amphenol got to 132, that was the price level we're looking at. If and when it got to 132, I was going to sell half of my position to lock in some gains. And that's exactly what we did. I got $13.75 for the calls that I sold yesterday. This trade happened yesterday when we got to 132 right before the close. I think it was like 5 minutes before the close when that happened. So sold half of the position for $13.75. Guys, do you notice what I paid for it? I paid $1.60 for my entire position, and I sold half for $13.75. We're crushing it in this trade, and we still have half of it on, and I'm going to keep that other half on at least until July, although I do have a stop here at 118. I'm not worried about this stop right now, but that's our current stop level for the remaining portion of the trade. And whatever we sell the rest of these calls for, it just adds to the nice profit we already have in this trade. And so it's already a great profit, actually. But whatever we sell the remaining position for, it's pure profits. This is you can qualify this trade as a home run trade, I think. Maybe I jinxed it. If it rolls over and we get stopped out at 118, it might not be a home run. Still a very, very good win. So that's our piece of good news. So that's all the action we had in the portfolio this week. But let's go into updated stops. We do have some stops that we need to update. There's only 4 of them, and in no particular order. Let's start with FXI. This is the China large cap ETF. You can see these 3 purple circles here. These are where we entered our position. According to our plan, we don't do this very often, but in this case, we did deliberately. We legged into this position. We bought our first tranche of calls at $2, and we wanted to keep buying them at cheaper prices if we got the opportunity to, which we did. We bought January 26 calls. We paid $2 for them on day 1. A couple days later, we got another third of our position at $1.75, and then about a month later, we got that last third for $1.50. Again, according to the plan that we had put in. And boy, the timing of that last fill was great because literally the next day, this rally began, and this position is also killing it for us. This might turn out to be a home run trade for us. We have until January. So, we got some time here. They're already $3 in the money, looking great. But we are adjusting our stop. Now we're moving our stop to 26.25. That kind of, we had a nice little gap here on May 2nd. We don't want to see this gap here get back into. If we do get back into it, 26.25, that's my current stop loss level. I hope and I expect that we'll be raising this stop even higher in the weeks to come. But already looking like a great trade. So for those of you who are in that one, congrats so far. Okay, Rocket. This one's been it started off as a rocket ship ride for us. It's coming back to earth a little bit, but hey, we got time. We're long the September 15 calls. We paid $1.34 back on May 6th. We are moving our stop up now to 13. 13 corresponds with some upward resistance here that played out early part of this year. It also is where the 50-day moving average is meeting us right now. So that feels like a good level. We don't want to lose 13. As long as we're above 13, we're going to keep holding Rocket. All right, next up, Google. Google is showing signs of breaking out above this earnings pop from April 26th. We've traded above it today. Will we close above it? I feel like we got good chance here as long as the market cooperates. We are in a protected risk reversal. Normally a risk reversal trade, that means we're selling naked puts and using those proceeds to purchase out of the money calls. This time we did a little different. We actually protected it. So we sold a put spread and we bought a call spread. Anyway, it's a trade that's working and it's working well. We're moving our stop up now to 162.50. We don't want to see this gap get into. And if Google were to roll over and get into this gap, that tells me that at least in the near term, at least on my time frame, this trade is not cooperating, and I will want out. The good news for us is that the short put spread is pretty far out of the money, and so we collected 30 cents when we put the trade on day one. If we were to get stopped out here at, let's say, 162, 161, there's a chance we might actually escape this trade with a small net profit. That's not the profit I'm looking for, of course. I want to make my money with the calls, with the 180 calls that I'm long and the short 190 calls. If we get up to 190, you can see a level up here. That's where we're going to take profits and close the trade. But Google's looking good. 162.51 is our new stop loss level. In fact, this 135, that's an old stop from the first day we put it on. I got to delete that. That's no longer valid. 162.50 is our stop in Google. All right. Last up, this is for us, a very long-term bet that we put on earlier this year. We put basically we're making a sector, what do you call that? A secular bull market bet here in energy. We thought that XLE is the biggest, broadest way to play a trend that we think is going to develop over the next year or two. We're long December 2026. That's more than 2 years from now is when these calls expire. We're long the 130 calls we paid $5 for back on when we get into this trade, April 4th. It's not going our way yet, but you got to love the way it's kind of hugging this 50-period moving average. But anyway, we're moving our stop for now up to $88. Again, this is a longer term trade. It's not, the P&L in this trade is not very volatile because we have so much time until expiration. 88 is our chart based stop. I also have another stop in this position where if the calls lose half of their value, I would also pull the plug in that situation also. But as far as the chart's concerned, 88. If we're below 88, we don't want to be in XLE anymore, but it's feeling pretty good, feeling pretty far away for now. All right, that's it for our updated stops. And then quickly, I'll just go over the two new trades we've put on since we last spoke. For those of you who are not members of All Star Options, for every trade that we put on, we publish a fully detailed trade plan. It gets into the setup and why we like it, how we're going to trade it using options, meaning what strategy we're going to use. And then we get into where our stops are, what gets us out of the trade, and where and if we will take profits. All of these details are laid out in every trade plan. So if you want the details, please head to allstarcharts.com, head to the members section, head to the options section, and you can find all those detailed trading plans. If you don't have access to that, let us know. We'll hook you up. We'll be glad to hook you up. So anyway, with that out of the way, one of the new trades we got into this week is Wayfair. We got into a bullish trade here. It's not working so well for us so far. We're off to a very poor start. We're almost stopped out of this thing, which, you know what? When we get stopped out of trades quickly, I'm all for it. I would much rather get stopped out of a trade quickly for two reasons. Number one, there's usually lots of premium left in that trade, so we're not getting hurt that much if we get stopped out quickly. Secondly, if I'm going to be in a losing position, I'd rather just get that thing off the books as quick as possible. There's nothing worse than being in a position for 4 months and then taking a loss on it, right? And that happens all the time. I'm not saying it doesn't happen. It happens all the time, but I don't like it when that happens. That just means I tied up capital for 4 months in an unproductive use, right? I could have used that money for other things, for other trades. So if Wayfair rolls over and stops us out, which our current stop is at 68, hey, that's fine. But that's a new trade we got on. Again, details are on the blog, allstarcharts.com. Next up is IAG. We got into this one yesterday. This is a leveraged play in the metals space, particularly gold. We're making a bet that gold is going higher and it's going to be led by smaller cap names like this IAMGOLD. All right, everybody, that's all I got for you. We'll just review real quick. Here's the updated stops. I know some of you like to have this little screenshot here, so if you need to pause the video and take a picture or write them down, please do. But that's the stops that we just updated. And again, any questions anybody has, you could email us at info@allstarcharts.com. If you want to get hooked up and get access to All-Star Options, where you can get all of our detailed trade plans, shoot us an email at that address and we will be happy to get you set up. All right, so that's it for me today. That's it for me this week. Next week, the entire All-Star Charts team is going to be all together in California. We have a client event that we are hosting in Sonoma. So there's going to be very limited action on the Stock Market Media channel next week. However, we will be doing a jam session on Thursday. I'll be doing it on location from the hotel. So should be same time, same place. We may move it a little earlier or a little later. I'll let you guys know in the chat. By the way, if you're not in the chat room, get in there. All the members of the All-Star Charts community or All-Star Options community are in the chat room. You can ask me questions. You can interact with each other. We share ideas. We boost each other up when we need it. We bring people back down to earth when they need to be talked down because they're feeling full of themselves as they had a great trade. All that stuff. It's a great community, and it's getting better every week, every month. So if you're not in there now and you don't have access, you don't have the information on that, also shoot us an email. We'll get you hooked up, info@allstarcharts.com. All right, everybody. Talk to you next week. Until then, have a good day.